Is that picking it up? Are we live? Is there sound? There is. Right. We are live again. We are live. We are live.
Hey man, I hope you're doing okay.
So
So it seems the price war is continuing. Halifax have just sent an email out saying they're reducing.
what an idiot. Good afternoon. Live on TikTok and on my wonky glasses and on YouTube. So welcome along, everyone. Hope you're having a great day. It's been absolutely busy. Hello, money saving man. Huh? You saving so much interest. Nice one. I'm glad to hear it. I am having. It's been a busy day, as you can imagine. Rate changes, changing clients, existing offers, that kind of stuff. So yeah, all good. Just a bit of a quiet period before the next call, so thought I would jump on and see if I could help you out. So Chad, did you? They wouldn't tell us otherwise. They just yeah. So if you do it yourself, the lender will not proactively contact you to say rates have gone down. So that's a reason to work with a mortgage broker because literally I did a rate change for an HSBC client I've got, and also this morning I did a rate change for a Halifax client I've got. And literally, I just do it and send them an email saying, by the way, rates have gone down, so I've now saved you £1,000 over 5 years. So that's one of the benefits of using a mortgage broker. I think one of them. But of course, I come from a position of bias, don't I? So I can only tell you what I can do for you. It's up to you. I'm too far in the process now, but I would have gone with a broker knowing this. Yeah. So maybe next time, when you come up to a remortgage or something, maybe that's the time to consider using a mortgage broker then. So I had another good conversation with a potential client this morning who are stuck on a variable rate up near like 8% or something. So yeah, the fee that we charge is certainly going to more than cover what they're going to quickly save. They're going to quickly save what we would charge. So I think it's worth it, but that's my opinion. But everyone's entitled to make up their own mind. And of course, you can do this yourself, just the same way that I can paint my kitchen myself. But I would prefer to pay to get a professional to do it. So there you go. If I could trouble you for some likes, that would be awesome. Just if we double tap the screen a few times, then that would be much appreciated because that gets more people on board, get some questions going. So yeah, if we could do that, then that would be great. Thank you, Chad. That's great. Did you contact HSBC this morning and ask them? Not HSBC, Halifax. Did you contact them this morning and ask them to change your rate based on obviously what you saw on TikTok? That post has done really well, actually. I think I've nearly had about 500,000 views on it. Lots of new followers, which is awesome. Lots of inquiries, which is also good. Yeah, emailed them within 5 minutes. Okay, nice one. And was it quick for them to do? Were they quite happy to do it? Let me know because that'd be interesting. Mortgage advisor is off today, though. Oh, right, I see. They should be able to sort that out for you. It was, it took me 5 minutes to change the rate for my client, and I've emailed them. So yeah, it's a relatively quick process to do. You have to do it with an element of caution because something might be reassessed. There might be another credit check or something. So it's always done with a pinch of caution. But generally, if the rates are going down, then affordability just improves, if anything. So it's a good thing to do. What's the date today? 17th. Okay. Someone has just booked in a call. So good on you. I'm not sure if you're on this live. Probably going to knock off a year because of it. Wow. Okay, that's interesting. Yeah. Well, if the rates are lower and the repayments are less, then if you're prepared to pay the higher amount, you may want to do that as an overpayment, so that you can, as you say, reduce the term. Because the dream, well, I suppose everyone's goal is probably to be mortgage free, freeing up your cash. So I think a mortgage is probably the biggest expense that people have. It's certainly probably the biggest purchase they'll ever make. So if you can pay it all off, then happy days indeed. Oh, definitely. But someone has just booked in a call with me, so congratulations. I shall speak to you then. If anyone does want to book in a call, it's really easy to do. Just click on the profile picture, and if you're on a live, you have to do it again. And there's a link in the bio so you could do it. Becky, are you finding that you're advising a tracker more than a fixed rate? Um, well, to start off, the answer to that, it really depends on the client's circumstances. Um, I would say that trackers now form part of the conversation and part of the consideration more than they did in the past. Some clients are more inclined to go with a tracker based on obviously increase or decreases in the Bank of England base rate. But on the flip side of that, I've then got clients who want the certainty of payment. So therefore, a fixed rate suits them better. So yeah, it's really based on the client's circumstances. We'll always discuss it and the pros and cons of trackers and pros and cons of fixed, and then come up with a recommendation that suits the client off the back of that. But yeah, trackers really are a point of discussion now, particularly following this morning when we've had the inflationary figures come out as what they are. That signifies that there may be reductions in the base rate. And if you're on a tracker, which obviously tracks just a bit above the base rate, then if they go down, you could well benefit. So that's exactly why they exist. And having said that, there is always the flip side to say there's no guarantee that they will go down, and there's no guarantee that they won't go up. So if you're considering a tracker, you need to effectively have money or affordability or leeway to be able to deal with any increases. That's why it's not for everyone. It is interesting times, definitely, Becky. And yeah, I mean, we're having some really good conversations with clients about what they want to do, about their what we call attitude to risk and that kind of stuff. So yes, interesting times, certainly. Um, on the flip side of that, it's bad times for some people who are coming off fixed rates of 1 or 2% to find that they're going on to 5% or 6% in some circumstances, which is obviously quite an increase in rate and payment. So we shall see. I think speaking to an IFA down the corridor, we're thinking that next year is going to be busy. I think we are seeing green shoots of recovery in terms of interest rates and therefore people wanting to borrow and all that kind of stuff. So, from a pure business perspective, we are expecting an increase in business next year. Um, I think my solicitor is getting annoyed. We've changed our mortgage rate 4 times due to reduction. Let them be annoyed, Rachel. Let them be annoyed. You don't want to be on a rate just to please your solicitor. No, no, you're quite right to do what you're doing. It's not. Why should they get annoyed anyway? It's no real change for them. Solicitors are just grumpy, aren't they? Don't worry about it. Don't worry about it. You do what you need to do. I was around 3 times now. Yeah, yeah, good stuff. But it's exactly you're paying them. You're paying them. So what's the news? Pretty much building on yesterday's news, really, in that we had reductions from HSBC, Halifax. I've had a few sort of buy-to-let lenders reducing today as well. So yeah, there's just seems rates just seem to be going in one direction at the moment. Um, I say they're going in one direction. They're minor adjustments, so they're not like tumbling. They're just very slight decreases. So I wouldn't I wouldn't get too excited about 3% and lower. Um, I think 3% might be a distant possibility, but they're probably going to be like 3.9s or something, and for loans to value that are 60% or lower. So for the vast majority of people, I wouldn't say that. I would say that 3% perhaps are a little bit of a stretch, but certainly I think you could be seeing 4% more in the mainstream market. I mean, on the Halifax release yesterday, they've got a 90% loan to value, which starts with a four. The rate starts with a four, so that's great. It's the first one I've seen. 24K salary with 4 years defaults. What are the chances of getting a mortgage? Yeah, I think your chances will be quite good, assuming there's nothing else on the credit file. You may need, certainly, you're going to need a 10% deposit at least. So, yeah. My deal ends 31st December. What's the latest I can leave it for agreeing a new deal? Well, you've probably run out of time to do a full remortgage. So you're looking at a product transfer. I personally wouldn't have left it that late. I mean, you can sort these things out 6 months in advance and then get something locked in and then change the rate on it. You're kind of limiting your choice by leaving it later. Would you recommend going with a broker or just finding my own mortgage? Right, you're probably going to think that, of course, I'm going to say broker, but I genuinely believe that you should because, like I said earlier, I can paint the living room myself, but I prefer to pay a professional to do it properly and do it well. So I would say go with a broker and be confident in the fact you're getting the best possible product that suits your needs. Um, yeah, you can do it yourself, but it's a lot of time you have to invest into it, a lot of reading. You could potentially make a mistake. Whereas go with a broker and get done properly. Should I say for 10% or go for a mortgage at five? Could you explain what the benefits? So if you're looking for a 95% loan to value mortgage, so with a 5% deposit, lenders are quite strict around that. So it's because it's more of a risk to them. So they're going to want you to have a really good credit file, really good credit footprint. Um, Still at 10%, it's still an element of risk to them, but they will perhaps be a bit more lenient on things like a missed payment or something. If you're going for 95%, you kind of limit your number of lenders to go with because not every lender offers 95%, and they're going to be really strict on the criteria. 90%, you open up a few more doors, a few more lenders come into it. So yeah, certainly, it's better. The more deposit, the better, I suppose. Um, so I have a deal in place with another lender. Okay. As my broker can't find a lender, I had to pull out my flat purchase. Reason was, sorry, I don't know. What the average cost for a broker, first time buyer? I don't know what the average. I'd probably say the average is for about 500 quid. I think it's money well spent though. Oh, especially if you're a first time buyer. Let me tell you what. So with my first time buyers, I really I don't sit with them. I speak with them and tell them what's involved in the process because I'm probably the only one that's going to be with them throughout the whole process. I tell them what the process is, what's involved, what happens at different stages. So, particularly as a first-time buyer, I'd really recommend getting a broker. You'd expect me to say that, but I honestly do believe that. Christian, no problem. You're welcome. When you overpay on your mortgage, does all the money you overpay go straight off the main balance? Absolutely, yes, it does. So when you overpay, you pay off the capital of the loan. And if your interest on your mortgage is calculated daily, then that reduces your interest that you pay. Even if you pay off 100 quid, it's 100 quid less you're going to have to pay interest on. So it's a good thing. So what is the rate now? Thank you. The only rate I can tell you of certainty is the Bank of England base rate. That's 5.25. It depends on if you're looking at fixed rates in the mortgage world. Depends on what product you're looking at, 2 or 5 year fixed, any credit issues, anything like that, your loan to value. There's loads of rates out there, loads of them. So to be able to tell you what it is right now, it's not possible, I'm afraid. I need a bit more information from you. 5 year fixed mortgage rates next year, September. I wish I could tell you, Emma. I wish I could look into my crystal ball and tell you. I think, well, it's really difficult. It's really difficult to predict. We might still see further reductions. Who knows? But they're probably going to be slight. Um, when we're seeing reductions at the moment, they are little. They are reductions, which is great, but they are small. So it's really difficult to say out to September next year. Good afternoon, Coxie. How are you? Thanks for coming along. Hit the likes if you can. That'd be awesome. I've got a meeting booked with the mortgage advisor to go through insurances. Do they go through this in? Yes, they do. Go, I mean, I've got a call later to discuss insurances with my broker. Yeah, I mean, when I'm with my broker, with my client. So yeah, for example, this afternoon I'm discussing insurances with a client. So I tell them all the, what's involved with each one, and then we work out what the client wants, what the sort of budget is, and then go from there. So overpayments, just repeat about the overpayments bit. Yeah, certainly. So when you overpay, you actually overpay and pay off the capital. So the actual loan. You're not paying interest, you're paying off the actual loan. So if your interest is calculated daily, which most mortgages are at the moment or now, then if you paid off 100 quid today, the interest tomorrow is going to be based off 100 quid less. So it's a positive thing to do. Check your paperwork. If you're thinking about making overpayments on your mortgage, check your paperwork, because you need to understand, one, that your product allows you to do it, and two, what the limits are so you don't incur any early repayment charges. 5-year fixed on shared ownership for your renewal next October. When can we start looking to move? 6 months prior to the end of the deal. Any mortgage, any fixed rate deal, you can look at your options 6 months prior to the end of that deal. Do you know if HSBC need to reassess with the rate drops after being offered a remortgage? So I did one for my client yesterday or the day before, and it came up saying credit check will be required, all this kind of stuff. So I don't know whether they're just covering their backsides to say, look, we might choose to do a credit check or anything, but they certainly do flag up that there is the potential of doing it. Mortgage up for renewal end of this month. Why have you left it? So do you have something in place? If not, you've left it very, very late. Is 5.9 a good fixed rate? Well, Sophie, it depends on your loan to value, depends on the product, fixed or 2-year. Depends if you having to go to a specialist lender. Can't really tell you without knowing more, I'm afraid. I can overpay by 10%. Yeah, a lot of mortgages are like that on 2 mortgage. Does that mean 10% each year? 10% each year, yes. So look, Sophie's looking at a 95% loan to value. Partner first time buyer, I'm not. Is there any way around? No. If you will lose the first time buyer, your partner will lose the first time buyer status. Unfortunately, if you're buying with someone who's not a first time buyer, that gets written off, gets ignored. So Sophie, I have 10%. So 10% deposit, I assume that is 6.09 offered. Wondering if you'll need to go before an underwriter again to get new rate. 6.9 sounds to me like either you're looking at a specialist lender or you're looking at a 2-year fixed, because that's the kind of point that would be. If it's special, let's not. 2-year fixed. Not every lender will allow it. Will allow you to change product. Let's be clear. There was one, I can't remember who it was, but a while ago, who tried to do it, and the lender said no. So not every lender allows it. So it really depends on each lender and their criteria and their processes, I suppose. 10% deposit, 5-year fixed, 5.69 with HSBC. I mean, it's high when you consider that, for example, Halifax are doing a 4.97% for a 10% deposit on a 5-year fixed. So that's the little comparison I can think of straight away off the top of my head. I wouldn't risk it if it was near completion. Yeah, Coxie's right. If you're near completion, there is a risk. There is a risk in looking to change rates. Let's not beat about the bush on it. So, there could be changes. So just to let you know, this is going out live on TikTok and on Instagram. Not Instagram, YouTube. The good thing about YouTube is you can go back and watch it back because it goes down as a recording. So if anyone wants to do that, the YouTube channel is Mellow Financial. So yeah, if you want to relive this wonderful event, then do so. Do you think the interest rate is going to stay pretty much at this level now? Good question, Katie. Good question. I don't know. It's hard to say. You speak to different people and get different viewpoints. So forming my viewpoint is tricky. I think this is the kind of the normal now. So I expect rates to be about the 4 or 5% mark. That's what I'm really expecting. So yes, a really loose answer to your question is yes. I think we're kind of at the normal point now, which is generally, I think, right. In the big scheme of things, if you look back historically, the rates now are still actually on the cheap side. If you look at history, I know that's not much comfort to many people, but I think people need to understand that the rates we had for the decade, the ones or 2%, were an anomaly. I'm getting used to that word now. It was really, really low. They were low because of the Bank of England's handling of the situation. They shouldn't have been so low for so long. The Bank of England should have steadily increased the rates, not just this massive whoosh, the Liz Truss effect, I suppose. So yeah, I think where we are, it's relatively normal in the fixed rate mortgage market. Bank of England base rates, I expect them to go to probably 4.5% next year. So that will be good. You've got to also think that when it comes to the Bank of England base rate, they need to please borrowers and savers. Because if you're a saver, in the last decade, your money's done nothing for you when it's been on incredibly low rates. So you've got to think these people need pleasing as well. Yeah. Got my rate reduced from 6.31 to 5.85 today. My broker wasn't happy because I said, piss off, your broker wasn't happy. You should be doing it anyway. I've done it today for one of my clients, literally just done it without them asking. Your broker sounds like a moody, grumpy thing now rather than wait until completion. Yeah, well, what if rates shot up tomorrow, Brad? Your broker shouldn't be kicking off. If rates shot up tomorrow, then you've got your rate secured. So happy days. It should always be in the client's best interest, not not the broker can't be bothered. How close completion should stop switching rates? Oh, I don't know. Really difficult. Really difficult. I don't know. I don't think because completion, your solicitor can turn around to you tomorrow and say, right, we're going to complete next week. So it's really difficult to say. Is it better to buy or rent at the moment? No answer to that. There's never a right or wrong time to buy. It really depends on your circumstances and if it's right for you. Yeah, indeed. That's what I said to him. His attitude has made me wary of him, to be fair. Yeah, Brad, well, you know where to go when you want a better mortgage advisor. So feel free, I'll happily take that on. Yeah, I mean, yeah, it's work to change a rate, but come off it. It's the client's best interest at the end of the day, not it's extra work for a broker. That's poor. That is poor, Brad. Sorry. How much do you roughly need in legal fee searches? If it's just a normal purchase, no sale, I'd say 1,500 quid. Put that aside, maybe. Just as a ballpark figure, some maybe more, some maybe less. How close to remortgage date should you stop changing rates or shopping around? It's a very good question. I'm not entirely sure of the answer, if I'm honest. What you don't want to be doing is having an open offer. Because of course the offer needs to be produced. So the Halifax one I did earlier, I did the change and the offer was there straight away. So it's a quick process. If, for example, your lender insists on reassessing it, it could take time, which could delay your completion. So Certainly, maybe a couple of weeks before completion, I'd stop doing it. Remortgage due end of April. Do I secure a rate now or hold up until Christmas? So Ayland Lots. Um, there's no real harm in doing it now, because if you secured a rate now, then your broker could just keep an eye on it and, like we've been discussing, move it to a new rate as rates change. So you've not lost anything. What you have done is sorted it out early and dealt with all the stress, if there is any, and got it out of the way and not had a mad panic towards the end. So I would say do it now and just keep an eye on the rate and move it if needs be. His excuse was that multiple rate changes can affect credit score and sometimes trigger re-review. I mean, that's an excuse you could use, yes. But to be honest, sounds a bit loose to me. With remortgage, do I need to pay on solicitor? Yes, if you are, you will need some conveyancing, but it's cheaper than a purchase. I mean, we can get a fixed remortgage at 349 conveyancing charge. So you can get free legals, but they're not all that. It's up to you whether you want to take the risk of the free one or pay 349 and get it done well. Do you know why a DIP is so different between different lenders given the same information? Yes, different lenders' criteria and appetites. That's why different lenders' calculations and multipliers of rates of incomes. That's why you'll find differences in DIPs. It's not uncommon. So don't worry too much about it, and just go with the broker and get the best one straight away. On new bank solicitors do remortgage due end of June, would you fix to a? I'm afraid I can't give that information over TikTok to do regulations. I need to understand your full circumstances and understand you as a client. So yeah, I can't give that over TikTok, I'm afraid. Happy to have the discussion with you. If you want to get in touch, book in a call, then just use the link in the bio and we can have that discussion. I live in the north and I've saved 10k for deposit. Do you think I should save more? Well, it depends. Well, I think I should speak to a mortgage advisor. Yeah, speak to a mortgage broker. I work with clients all over the country, so if you want to speak to me, then get in touch. It depends what the asking price of the properties are. So is 10k enough for a 10% deposit, for example? It all comes down to the percentage, not the amount. It's the percentage of what that deposit equates to. So happy to have a chat to you about that. If you'd like to get in touch, feel free. We've got 5.95 on a 2-year green product mortgage, 90% loan to buy, first time buyer. Is this good or high? No, I'd say that's all right, I suppose. 5.95, 2-year fixed. Let's just have a quick look at what our friends at Halifax produced recently. So first time buyer car, I'm gonna have to zoom into this product, this thing they produce. So we're looking at 90% first time buyer. Was it a green product? New build buyer, that kind of first time buyer only, first home. Yeah, you see, well, that's 75% home buyer. Home buyer green home. Here we go. 2-year, 90%. See, they're at 5.69. So, all right. So let's just look at the new build ones, for example. Home buyer, new build. Halifax are very good for the new builds. 2-year new build, 5.89. So there you go. That's with no fee. If you want to pay a fee, 5.63. So there's your comparison there. Do you take on clients all around the country? Certainly do, Tyrone. Yes. All our processes are remote over phone and email. So yeah, we work with clients all over the country. So feel free to book in a call if you would like. That's what we do. You are welcome, Chloe. We've just got a 3-year, 5.6 first time buyer, 27 mortgage. See, 5.6 on a 3-year fixed. So at the moment, Halifax are only offering, I'm just trying to look for something to compare it to. Halifax are offering 2 and 5, but you've gone for what was that? 5.6, 20%, so 80% loan to value, 5.6. First time buyer, 80%, 5.6. Yeah, that's a Halifax rate with no fee. If you paid a fee, you could get it for 5.34. If you're a first time buyer, yeah, I mean, it depends whether you want to pay your fee or not. And it depends how that sort of works out over a 5-year term as to whether it's a good deal or not. So yeah, it really depends. Only able to stump up 5% deposit first time buyer, 95% mortgages depleted. No, I mean there's still lenders out there offering 95% mortgages. Don't worry. They just tend to be a bit cautious with terms to risk when it comes. So yeah, you just make sure you speak to a mortgage advisor and get the best outcome. Any idea on average legal fees and surveying? Right. So if we go with just a purchase, the legal fees probably about 1,500 quid. Survey, there's different levels, but if you want a really good one, probably about 600 quid. Depends on the price of the property, but 2 grand, you might be able to cover it all, or just over 2 grand. Should cover your legals and surveys, but very good for thinking about survey because not everyone does. You spend a huge amount of money, even though you never see the money. It's a massive purchase, and so you want to make sure you're buying the right thing. So a survey is really good. Not everyone considers it, and people just see it as an added expense, but there is value in doing it. If you're buying a new build, you don't need to because it's covered by the builder's warranty, and you get snagging and all that kind of stuff. So no need for a new build. But if you are buying a older property, then yeah, certainly a survey is well worth it. Do you think that NatWest are reducing rates for existing customers? I know they have for new. I'd hope so, because the money they're able to borrow, it just depends on how the balance is, the books are looking, I suppose, with them. So any idea on up in Scotland? I don't know. I haven't done a survey quote for up in Scotland, I'm afraid. So I'm not too sure, but I wouldn't have thought it'd be too far off. Coming off doing an extension with Progressive variable 6.5, looking to lock into a fixed in June. Yeah, I mean, even if you went on a tracker, you'd be looking at about 5.5. So yeah, it's certainly a viable option. You can either fix or go on a tracker, depends on what you do. It's Riley in disguise. Is this another TikTok account you've got, Riley? I don't know what Riley will be able to help us. Oh, sorry, I thought I was answering the question about surveys. Not yet. I need to come back to you on that, don't I? Sorry. I don't know about you, Riley, but I'm pretty swamped at the moment. So it's probably looking like back end of September, early December right now, or even second week of December. So yeah, sorry, I need to come back to you. Do you reckon rates will drop below 4% in the new year? Interest rate, fixed rates? I don't know. I really don't know. If they do, it's going to be for low loan to values, and I suspect it'll be sort of like 3.9 or something like that, just to get below the 4% mark. Riley's on board. Ask Riley what he thinks. It's always good to get a second opinion on these things. Really difficult. First time buyer, best to start on lower percentage to keep costs down. It's the best solution is what's best for your circumstances. So I'd recommend having a chat with a mortgage advisor. I really would. Oh, you mean to go on shared ownership? Shared ownership has pros and cons. Look carefully into it. Low loan to value considered 85? No, a low loan to value I'd say is probably sort of 75 and below. by new year, no. Mid next year, lower through. I agree. Totally agree with that, Riley. Totally agree. For low loan to value, so sort of 70 below, you might get a 3% deal next year. Are there any issues using a lifetime ISA for deposit? Not at all. That's mainly what they're designed for. Not at all, Tyrone. That's what they're for. Not long before I've got to prepare for another call. Yeah, Riley, let me know how you're set for the last week in November. I've obviously got to tie this up with other plans, or the second week in December. Actually, that's looking more likely, I think. Second week in December, something like the 12th or 13th of December. Is a 40-year good for short term to keep monthly payments down and revalue? Yeah, certainly that's a strategy that some of my my clients are going with the longer term to get the payments down, and then hopefully, life can change. So certainly if you're first time buyers, you might get pay rises and stuff. So yeah, it's certainly a strategy. Can't find any deal under 5.49 interest rate Barclays. Is there any banks lower? Yeah, depending on loan to value and whatever's happening in the market. Why did you skip my question? Sorry, I'm not answering. I'm literally looking at them when they come through. It might have shot through again, so ask it again if I've not answered it. Due to extension, I had to take Santander loan. Can I consolidate this into mortgage? You can do, but consolidating debts onto a mortgage needs to be carefully considered, because you are potentially going to end up paying more in interest because you're probably borrowing over a longer term. You are potentially securing unsecured debt and converting that into secured debt. So it really depends. The pros could be that you save money, but pros and cons. When doing debt consolidation, it needs to be looked at quite carefully. If I want to add a second name onto the deeds after paying for mortgage, who do I contact? You need to contact a solicitor, and if they're on the deed, your mortgage lender will probably want them to be on the mortgage as well. Do you suggest making use of overpaying and being able to pay off 10%? So I can only advise on mortgages because I'm not a qualified financial advisor. So when it comes to mortgage overpayments, yeah, I can certainly recommend that. As to whether that's the best use of the money, I can't comment. Had a survey from the bank. They say climate risk. Do you think they will issue my mortgage? Climate risk? Interesting. Does that mean potential flooding? Interesting. I need to know the. I think that's the valuation they've given, not a survey. Probably. I don't know if that's come up in an evaluation. Depends what they term as a climate risk and how much risk that is to your valuation as to whether they will issue a mortgage or not. They may value the property at a lower value. So really difficult to say. Really difficult to say. Right. So don't forget that this is also going live on YouTube as well as TikTok. So if you want to watch it back, then you can do on YouTube because it goes down as a recording. If you're watching on YouTube, feel free to ask any questions in the chat and I shall answer them for you. At the moment, all the questions are on TikTok. But if anyone does want to make contact, then the email address is Philip with one L at mellowfinancial.co.uk. That's Philip with one L at mellowfinancial.co.uk. Or if you're on TikTok, you can easily just look at my bio and there is a link to booking a call, which goes straight into my diary. And I will call you at that time. We can have a chat. Nice and easy. So, yeah. After how long is it when lenders don't look too much at CCJs? Well, if it's on your credit file, they'll look at it. So I think a CCJ will take about 6 years to come off a credit file completely. So, it's still going to be showing on your credit file in 6 years. So if it's there, they'll see it. If it's not, they won't. time is a healer with credit files and CCJs and defaults and stuff. So yeah, really, really a long time they affect things. So, yeah. Oh dear me. Right, I'm gonna have to start considering getting ready for a call with a client shortly. So make sure if you've got a question, a burning question, then ask away. Do they have a way to look beyond 6 years on a credit file? No, no, not really. I mean, your credit file, it just shows stuff on there. Are benefits counted towards your income? They can do. Absolutely, yes. There are lenders which will consider it. Some lenders will take full benefits. Some lenders will take a percentage of them. Some lenders take some benefits that others don't. Certainly, things like child benefit is quite a common one to be looked at. PIP is another one that a lot of lenders will take. Um, don't get into debt too much and pay your bills on time. That's very good advice. Yes, that is good advice. Um, being self-employed, is it right? You need 3 years books. No, you can get a mortgage with just 1 year's books. Ideally, you want two, but no, you can do it in 1 year's books. And so, filed accounts and tax returns. That's what we would need. There are lenders that would do it on just 1 year. Two is better, but yeah, can do it on one. So it's not true that you need to have 3 years books. Not at all. If you rent your house out, do you class this as income? Yep, can do as long as it's declared on your tax returns. No worries, Miggy, don't know. Katie, no, if it's declared on your tax return as income, then it can count. Would you recommend shared ownership if it's the only option with a small deposit? If it's the only option, then yeah, that's the only option you've got. Look at it carefully though. Look at the pros and cons of it. Don't go into it blinkered. Go into it knowing all the facts and the potential pitfalls, and yeah, go from there. It can be a really good stepping stone to increase that deposit. I read somewhere that the majority of us are all 3 months of bad luck away from being homeless. I've read the same thing. That's why it's important to make sure you've got adequate protection in place. Things like income protection is a really good one, which will can insure against that. So that's where the insurances play their part, and savings, of course. Katie, you are welcome. That's what I'm here for. So yeah, it's that's certainly a true fact, I think. Realistic time to be mortgage approved. Student loan, student now with job lined up for February at 28. So that's an interesting one. So I mean, a mortgage application doesn't take very long. It's the conveyancing side of things that takes a while. That can take about 3 months. Is 3 months is probably a good average to go by. But if you haven't got the income lined up yet, you sounds to me like you're going to be going on a signed employment contract. So there's going to be limited lenders that will go on that basis. Otherwise, you're going to need to have pay slips to prove your income. Any signs of reductions from TSB? We don't get signs of any reductions from lenders. We literally just get told by an email that comes out saying tomorrow we're changing our rates. So yeah, we don't get any sort of early warnings, I'm afraid. Mortgage companies are being nice to people should lose their homes if they don't pay. Right, I think you're just trying to stoke anger. Do lenders do more checks at completion after offer given? Yeah, they can do. So what they want to they want to make sure that before completion, nothing's really changed, so that you haven't gone out and financed a Lamborghini or something, because that will affect your ability to pay the mortgage. So yeah, they can certainly do it. It's a really good bit of advice is between your sort of application and completion, don't make any credit applications. Don't go and get sofas on credit. Don't add to your credit. Don't max your credit cards. Don't change jobs if you can help it. All kinds of stuff. Just keep things the same. Just keep things the same. Smithington, I'd suggest to ignore it. What are the main downfalls of shared ownership? I've done my research, but it's good to. Okay, yeah, I mean, so things are when it comes to selling, so you can only really sell through the scheme. So that could be a potential pitfall. It's going to be on a leasehold basis, so you're still going to have to pay ground rent and that kind of thing. Not every lender will lend on shared ownership. You still obviously have a landlord over your head, so you still got to pay rent as well. They can put some restrictions in place, that kind of thing. You probably know all that anyway, but they're the kind of the highlights. Our neighbours have not paid the mortgage for 12 months. Oh, sounds like he's not going to be your neighbour for very long. Hope that helps, Harriet. Does having a balance on credit card affect getting a mortgage offer? No, it can do. Well, it won't necessarily affect getting the offer. What it will affect is your affordability, because you have a debt to repay there. So you have to repay that, and therefore that money can't be used to pay a mortgage. So therefore your affordability will be slightly affected. But don't worry too much. I mean, it depends what your income is. I get mortgages for people that have credit card balances, cars on finance, that kind of stuff. So just depends how it all stacks up. It's obviously better not to have that, but it's not a deal breaker. Can you get a mortgage after your trust deed is finished? Trust deed for what? What's your trust deed coming out? What's that coming into it? Should be able to. So I've got a couple of emails that are pinged in my ear. Kent Reliance are changing their products. Here we go. What's this? That's buy to lets though. Kent Reliance buy to lets changing. What else is happening? Keystone are changing products, reduced rates available from tomorrow. So I'm looking at Keystone. They are coming down. My parents just bought a 700 grand house on 170 combined income, payments over 14 years. Good for them. Can I use my credit card's amount before completion date? I would advise against it. I would really advise adding to your credit card debt before completion. I really would. Best high street mortgages currently? The best mortgage is the one that's best suited to your needs. Did you hear about Barclays just charging loads of mortgages? No. Did you? There could be dodgy ones with buy-to-lets that aren't maybe mortgage fraud or all that kind of stuff. But yeah, going back to that best high street lenders, it's really the best lender that suits your need. What's the interest rate just now for self-build mortgages? Depends on so many things. What do you work as? Sorry for asking. I'm a mortgage advisor. I am a mortgage and protection advisor. So that's why do lenders check credit history before completion date? Yeah, potentially. Mr. Nobody, was there something you wanted help with? Because we have IFAs as well. If you wanted IFA advice, do lenders check credit history before completion? Yes, they do. They want to make sure that you haven't maxed out credit cards, bought Lamborghinis, bought another house with a mortgage, all that kind of stuff. Okay. Thank you for the follow, Katie. Appreciate that. It's the OS1. It's the OS1 search, isn't it? What do you mean? What are we talking about here? Mr. P. Are we talking about fraud? You don't need to know. I need to do. So I don't know why I said that out loud. But I do need to start making preparations for a client call shortly. But I just thought I'd jump on here and say hello. I'm waiting for a lender to come back to me with information about a product transfer for a client. Where are they? Where are they? Precise. What are you doing? Buy-to-let changes. Lots of buy-to-let changes today. Lots of buy-to-let changes. Newcastle. Interesting. To check that people haven't gone bankrupt prior to completion. Yeah, it's a credit check. They'll look at your balances. Of course, they want to make sure you haven't gone bankrupt. They want to look at your credit balances, your credit commitments, make sure they've not changed. Because you could have, for example, taken out a buy-to-let mortgage, which could affect an application, or you could have suddenly maxed out your credit card, so now you have big credit card debts to repay, or even taken out another loan. So yeah, they may have, for example, put a condition on the mortgage that certain debts need to be repaid. So they're going to want to see that has happened prior to the completion. So there's certainly a few checks that they do. Currently working as paralegal at a conveyancing firm, but looking to CMAP. Interesting. Right. Right, I'm going to have to do one because I've got work to do. I just came on quickly. So hopefully that's been useful. If you want to get in touch, then just to say the links are in the bio. I'll put them in the comments on the YouTube video. So yeah, do feel free to get in touch if I can help you or if you've got any questions. Links are in the bio or in the comments on YouTube. So yeah, feel free to drop me out. If you want to drop an email, it's Philip with one L at mellowfinancial.co.uk. Thanks for joining me. Till next time, goodbye.